Hey traders, Raghee here. This was the day after the FOMC, an FOMC that rocked this particular triple witching FOMC to triple witching sandwich here in June in a lot more significant a way than the one we saw in March. And so one of the questions I received a lot of was this something that we see every, basically the time between the FOMC and the expiration. So if you go back to March, let's do this for a moment, and then we're going to take a look at the intraday charts. If you go back to March and look at expiration, 17th through 19th of March, and you can do this on the S&P or the Dow, what have you, and if you take a look at that, you'll notice in that window, a little bit of weakness, right? But the market pulled back after the FOMC date into triple witching and then popped up after triple witching. Am I going to assume that's going to happen this time? Well, the Federal Reserve has changed the narrative by coming out a little bit more hawkishly. Now, I don't think this was an awfully hawkish statement, but what we have to remember is certain markets held their uptrend in the aftermath, and some were already breaking down or at least starting to go a little neutral, like the Dow and transports and industrials. Now, I don't think the Dow uptrend is not able to resume. I think it could, but I think we've also seen where the Dow has been disproportionately benefiting from the reflation trade. So it makes sense that it's disproportionately suffering as that trade is unwound. We'll talk more about the macroeconomics of the unwind and the sector rotation, as well as how we use the daily today to pinpoint the NASDAQ early on. So let's talk about this, because if you joined me for the webinar last night, we got into the importance of the daily time frame and how much time I will spend looking at about 6 different things before we even start to trade the shorter term time frame. And so the NASDAQ and the daily time frame, which is there's a couple things that we're going to emphasize a lot more in this upcoming class. And this is a question that I've received a lot of. How different is this from other day trading lessons and classes that we've got from you, Raghee? And probably the most important 3 things that are different about this class is, number one, it comes with the new Darvis upgrade, the Darvis 3.0, which is the signals version. It also comes with the V-score signals version, okay? It also includes right here, our volume flags. All right, so a couple indicators to make the process a whole lot, I believe, clearer to see the signals and the trades. But I'd say the biggest addition is how much more we're going to incorporate Darvis, as well as other patterns, other narrow ranging patterns that we would see on the daily. And really the emphasis on the daily is probably one of the bigger components of this class than last year. And that also means, as sort of a bonus, you're going to have a better ability to understand what's going on in the daily, to make better trades on the daily, and all the while make better decisions on the intraday. So let's talk about some of these decisions. One of the decisions was definitely the fact, and we talked about VWAPs yesterday, these are anchored volume weighted average prices. And yes, we were above both. The most bullish market we had and the most clear directional bias that I had was on the NASDAQ. So this was the preferred setup. We were looking for a breach retreat. We were prioritizing buys on the NASDAQ. So we got the directional bias sorted out first. And the path of least resistance to the upside was the best in the NAS. Now, if the NAS broke out, then we could start thinking about the S&P. Where were we not focused bullishly? The Dow. And also, the S&P had a lot of hoops to jump through before we would even be open to trading it. So if you know the NASDAQ is your relative outperformer, here's where that kicks the door open, along the lines of then, what's the next big thing with this class? I'm going to show you how I day trade options in stocks and an ETF. So if the NAS has the best clarity, we can dive into XLK, the tech ETF. We can dive into communications. We can dive into discretionary, semiconductors, even some of the cloud computing. Folks even asked me about the CIBR today, the CIBR cybersecurity ETF. So once that QQQ or NQ clarity is there from the daily, then that opens the door up to the sectors and the stocks that are going to very likely move with this larger tide. And that is going to keep you more often than not, nothing works all the time, but that's going to keep you more often than not on the right side of the trade. And that's a big part of the playbook that I'll be teaching you all next Saturday. So if you haven't checked out the replay for the class, if you registered, that should be sitting in your inbox. If not, head on over to simplertrading.com/entry-replay. All right, so head on over to simplertrading.com, entry-replay. Let me see if I can't put this on the screen for you all. Check out the replay. And if you're ready to just jump into the class with me on next Saturday, the 26th, head on over to simplertrading.com/climb. And you can learn more about the new day trading playbook for 2021. What are the nuances? What are the tweaks? And what are the brand new tools making these setups the easiest they've ever been to identify before? And again, one of the huge distinctions is just how much work we do on the daily time frame. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.